All right, welcome to the Explainer. Today, we are diving into a huge mystery playing out on the stock market. We're talking about a software company, its super bold executive chairman, and literally billions of dollars in Bitcoin. This is a high-stakes drama, and you're going to want to see how it unfolds. Okay, so let's get right into the puzzle that has everybody scratching their heads. You've got this software company, right? Looks pretty normal on the surface, but its stock is in an absolute free fall. And the reason why? It's all tied to the crazy, volatile world of cryptocurrency. So yeah, this is the big question on everyone's mind, from Wall Street pros to everyday investors like you and me. How in the world did a software company get so tangled up with the fate of a cryptocurrency? It's a wild story about a complete corporate makeover, and believe me, the consequences are massive. So let's dig in and see exactly how we got here. And when I say tangled up, I mean it. The scale of this connection is just staggering. Look at this. Over the last year, Bitcoin's price took a pretty big hit, right? Down 25%. But Strategy Inc. stock, it absolutely plummeted, down 56%. That's more than double the drop. This isn't just a coincidence, folks. It's like their fate is tied to Bitcoin with a lead weight. And that massive drop has led to, well, this number right here. We're talking about an unrealized loss, a paper loss, of over $17 billion. I mean, that is just a mind-boggling figure. It really makes you wonder, how on earth did a software company get itself into this kind of situation? Well, the answer is pretty simple, and honestly, pretty audacious. It all comes down to a huge corporate pivot. They decided to make a massive all-in bet on Bitcoin, basically treating it as the new digital gold. So, let's rewind a bit to 2020. The company's executive chairman, Michael Saylor, makes this game-changing decision. He says, you know what, we're not just going to hold cash in our reserves anymore. Instead, they started buying up Bitcoin like crazy, making it their main treasury asset. This one move completely changed who they were as a company. And yeah, it kicked off this whole wild ride.
And listen, they didn't just dip their toes in. No, they did a full-on cannonball into the deep end. The company went on this incredible buying spree, scooping up over 700,000 Bitcoins. To put that in perspective, that's an astonishing amount, more than what many countries hold.
So you're probably asking, where did they get the money for all this? Well, they basically re-engineered the whole company into what Saylor himself calls a credit factory. Think of it like a machine. They raise money from the markets by issuing debt and selling stock, and then bam, they turn around and use that cash to buy more and more Bitcoin. And just look at the sheer scale of this bet. We're talking about a total investment of over 54 times billion dollars. Now, since Bitcoin's current price is way below their average buy-in price, it's pretty easy to see where that giant $17 billion paper loss we talked about is coming from. Okay, but here's the thing. When you make a gamble this huge and you fund it with mountains of debt, well, there are going to be massive risks involved. And right now, those consequences are starting to get very, very real. Yeah, that credit factory doesn't run for free. It comes with a seriously hefty price tag. Get this, the company needs almost $700 million a year, every single year, just to pay the interest on the debt they used to buy all that crypto. And the kicker? Their original software business barely makes enough cash to put a dent in that. So this whole cycle has backed them into a corner, something analysts are calling the leveraged Bitcoin trap. They're basically dependent on constantly issuing new stock to keep funding their Bitcoin habit. And for existing shareholders, that's a huge concern, right? Because it means their slice of the company pie just keeps getting smaller and smaller. And if that internal pressure wasn't enough, now there are two new threats coming from the outside. First up, there's a new accounting rule, and it's a big deal. It means those huge paper losses we saw, that $17 billion number, now have to be slapped right onto their quarterly earnings reports. You just can't hide it anymore. And second, you've now got these Bitcoin ETFs. They give investors a super simple, direct way to buy into crypto, which really eats into Strategy Inc.'s whole reason for being, you know? So here's the bottom line. All of this chaos has created this absolutely fascinating battleground. Right now, the market is sending two completely opposite, totally contradictory signals about where this company is going. Which leads to a really interesting dilemma for anyone looking at this company. Who do you believe? Do you trust the expert opinions of analysts, or do you trust the cold, hard data from the market itself? Because as you're about to see, they're telling two wildly different stories. I mean, just look at this. It is a total split personality.
On one side, you have Wall Street analysts practically screaming from the rooftops, strong buy. They're setting price targets that suggest the stock could go up over 200%. But then you look at the other side, the technical indicators, just the pure raw data, and they're all flashing strong sell. It's a complete and total contradiction. How can both be true?
So let's dive into that strong sell signal for a second. What does it actually mean? Well, the chart shows the stock is in a long, sustained downtrend. It's even formed what's known as a death cross, which sounds bad because, well, it is. It's a classic long-term bearish signal. On top of that, other key indicators are showing negative momentum and that the stock is oversold. Basically, all the raw data is pointing in one direction, down. It's about as pessimistic as it gets. And all of this, the debt, the market signals, the huge bet, it all boils down to one final billion-dollar question. And it's all about the company's leader and his unwavering belief in this strategy. Is he a genius who sees the future, or is he just being reckless, gambling with other people's money? Because despite all of this chaos, despite the red flags in the data and those huge paper losses, Michael Saylor, the executive chairman, is still incredibly bullish. He's not just hoping for a bounce back, no. He's predicting a future where Bitcoin goes to the moon, reaching absolutely astronomical prices. For him, this isn't a gamble. It's a once-in-a-generation opportunity. So that's the story. It's a massive, high-stakes bet that really leaves us with one big provocative question. Is this company pioneering the future of finance? Is this a visionary move we'll be studying in business schools for decades to come? Or are we just watching a reckless, super-leveraged gamble that's about to become a famous cautionary tale? The final chapter of this story is still being written.